This is a picture of Paul Tudor Jones. He is recognized as one of the best investors currently trading stocks. He owns his own hedge fund, and he's credited with saying that the best way to make money in the stock market is to avoid losing money. And he says the easiest way to do that is to never own a stock that is below its 200-day moving average. And so with the Bus 13, Bus 12 portfolios, we have in our charts a key that shows exactly where each of those stocks is relative to their 200-day moving average. And so we move out of them. Well, just this week, Homer is one of our tribe members, one of my longest supporters, sent me a Trading Views chart that showed that 76% of the stocks in the S&P 500 are currently under their 200-day moving average. And this chart then shows you the momentum of that and how it basically gives some predictability as to where the stock market is going based on past times that a substantial or majority of stocks are under the 200-day moving average. So I decided I was going to explore that deeper and then share it with the members of my tribe. And as long as I was doing that, I might as well share it with you as well. If this is the kind of stuff that you like to see, give this video a like and subscribe to the channel so that Google knows that you want more than pump and dump. You want something that will give you an advantage in today's stock market, like Paul Tudor Jones says, just avoid losing money. We'll get right to that right after this disclosure that this is not financial advice.
Best of Us Investors presents Kerry Griegmeyer.
This is my version of the Trading Views chart. As you can see, it's the S&P 500 stocks above the 200-day moving average, and it's on a weekly basis. And I've taken it back to 207 so that you can get something of a view of how this affects the stock market. Again, what it is how many are above the 200-day moving average. So to give you some reference point, here on February the 19th, 07, 89% of the S&P 500 were above their 200-day moving average, but by the March the 30th of 09, it was down to 3% were above the S&P 500. And of course, this was the start and the severity of the subprime crisis, where the housing bubble occurred, or we had bank failures. We had a lot of what we're seeing right now, the effects of costs of banking. And then again, it surged back up. And in October of 09, it was back up to 95%. And so you can see there's kind of a trend here that in good days, it's up around 93%, and in bad days, it's down around 9%. Well, where we are right now, as Homer pointed out to me, is at 24.05, or 25% of the S&P 500 stocks are above the above the 200-day moving average. Conversely, 76% of them are below, and the momentum, and that's truly what you got to watch, is downward. As you can see, this is a weekly chart, and in just the last week, it dropped from 33 to 24. The week before that, it dropped from 45 to about 35. So it's dropping weekly. And so I think it's fair to say that in the near future, it's going to be down from 24 to somewhere around 10. That basically says it's going to pull the momentum of everything. Now, what we also know is that of this, when this, even this year, if we say in 2023, 65% of the gain in the S&P 500 is controlled by 7 stocks. So, but this basically says, I guess 24%, that would leave about 120 stocks. We know that 7 of them control the 65% of the gain of the S&P 500 totally. So, and I've done this. I did a video just the last week where I went through literally every stock in the Dow and the severity of some of the negative numbers that the Dow has shown. But this is even a broader perspective. It's impossible to go through every chart of the S&P 500 and see where all the stocks are, and most of them, for me anyway, I wouldn't even recognize their names. But this gives you some feeling, at least it does for me, as to where the stock market is going. I have openly said I want to own Amazon, Google, Microsoft. We'll see about Apple and Nvidia in the coming, and Meta in the coming months. In fact, I had said that Amazon is probably going to go to a $250 stock, but I want to emphasize, I think it was at 128 on Friday's close. It could go below 100 before it goes to 250, and it will be drawn down not so much by its performance, but of the overall exit of the markets. And what is causing that markets? Well, we know that interest rates are high, so the economy is slowing down, that companies are having to pay a higher debt service, same as human beings are, particularly if you've got credit cards. The credit cards are being maxed out. Business is slowing down. So even though we know there are 7 stocks, actually there's probably about 27 of them that are going to benefit tremendously from the artificial intelligence revolution. They got to get through this bad times, and overall momentum, as this chart shows, is going to bring it down. As Paul Tudor Jones says, the best and the easiest way to make money in the stock market is to avoid losing money, because once we recognize that the interest rates have leveled off and started to come down, then this market is going to rally because money will cost less, that corporations' cost of debt will go down, consumers' cost of debt go down, so the market will rally. The best thing you can do, though, is to be in the market when it rallies and to recognize when that rally is starting. And that's why I've put together what I call a cheat sheet. And the cheat sheets basically are made up of when the market rallies, what is it I want to own? And I have identified about 30 stocks that I recognize are going to be instrumental in upgrading the internet so that it can hold the capacity that artificial intelligence is going to be put on it. And then who are the companies that once the internet is upgraded and artificial intelligence is being delivered to us by those who are the big winners in the delivery. So what I want to do is on that cheat sheet is basically through financial analysis, that is looking at their books right after their earnings statements and see what their debt service is and projecting what it's going to be in the future and how their revenues are growing and how that reflects in their profits. So I understand the 30 companies extremely well financially. And then I go and use what I've learned from Mark through his swing trading and analyze their charts so that I can see where are their resistance levels, where are their support levels, what is their historical gaps that are needed to be filled, so I can get a handle on, as this market brings them down, where's it going to bring them down to, and where is the price that then I want to buy in before the rally starts. And again, the signals of the rally is going to be given to you by Jerome Powell. He is going to say, hey, this quarter, this month, we're going to reduce the rates. When that happens, your grocery bill will go down. Your gasoline prices will go down. So you'll start buying more stuff. And as you buy more stuff, corporations do better. The economy does better. So as Paul Tudor Jones says, all we've got to do now is sit on our hands and avoid losses. We know that the S&P, 24% of it, is only 24% of it is above their 200-day moving average. We have a good feeling that that number will go down to around 10%. We'll watch Jerome. We'll check our cheat sheet and update it regularly to find out, as Amazon is an example, 128 today. Where's it going to go eventually? It'll go to 250. But before it goes to 250, it will most likely go to 100, and maybe it'll go to 75. But we can see that through the charts. That's what I do. That's how I trade. That's how I can learn from Paul Tudor Jones, how you can learn from Paul Tudor Jones, and just avoid the risk, avoid losing money. And now is the season of losses. The season of gains are coming. We've got to be in a position to take advantage of the spring that is going to bring us increased prices in the stocks we choose to own. I'm Kerry Grinkmeyer. I have a website called Best of Us Investors. That's where I share all this information with my tribe members. You can go to the site. You'll see what the price of entry is, and I would like to help you take advantage of what I believe is going to be the best investment opportunity of you and I's lifetime. And folks, I'm 79 years old, so I've seen lots of ups and downs, and I believe the up that I am about to witness is going to be the surge of my lifetime. Get on the bus, learn, and earn. We'll talk again tomorrow.